Global macro, asking the big questions. KTL, Huberty, Global Director of Research, Morgan Stanley and Company, LLC.
A core element of the research process is asking the right question at the right time. Each December, senior Morgan Stanley and Company research analysts from around the world gather to discuss the biggest questions their industries face and the debates that will shape returns in the years ahead. Looking back on our gathering last month, here are 5 investment questions our teams will zero in on in 2025. Could the artificial intelligence, AI, focus shift from infrastructure to agents and embodied AI? In 2024, the market largely concentrated on the AI enablers semiconductors, data centers, and power companies building out AI infrastructure. How will the AI story morph in 2025? 2 areas our analysts called out were agents and embodied AI. We could see a shift from reactive to proactive AI systems that can act within a set of regarding embodied AI. As investors start to think about the ways AI could engage with the physical world, they are increasingly interested in humanoid robots. Guidelines. A shift toward agentic AI would have major implications for productivity. Could the artificial intelligence, AI, focus shift from infrastructure to agents and embodied AI? In 2024, the market largely concentrated on the AI enablers semiconductors, data centers, and power companies building out AI infrastructure. How will the AI story morph in 2025? 2 areas our analysts called out were agents and embodied AI. We could see a shift from reactive to proactive AI systems that can act within a set of guidelines. A shift toward agentic AI would have major implications for productivity. Regarding embodied AI, as investors start to think about the ways AI could engage with the physical world, they are increasingly interested in humanoid robots. How do we allocate the energy we have and increase supply? Global energy security is becoming more important. Addressing energy needs will likely involve both innovating in energy generation and improving existing infrastructure to accommodate AI, as demand far outstrips supply. AI impacts will likely remain largely a U.S. concern if the U.S. continues to create the most powerful models. However, this is only the tip of the iceberg. Gas capacity, hard-to-electrify industries, deflation in solar and breakthrough battery technologies are all likely to remain key debates in 2025. What do protectionist policies mean for the U.S.? The market is sharply focused on tariffs as we head toward 2025 and a new presidential administration. Tariffs are likely to affect a wide range of industries, with more acute impacts on consumer goods companies. Tariffs are levied at the product level rather than at the company level. Thus, component traceability is becoming increasingly important, as are more transparent and verifiable supply chains. How does progress on reshoring evolve? The first Trump administration provided the spark for reshoring, and Trump 2.0 could add fuel to the fire. U.S. reindustrialization is a multi-decade theme, which we estimate to be a $10 trillion opportunity underpinned by structural tech advancement and heightened focus on operational resiliency. What do longer lifespans mean for society? The U.S. population is aging. 18% of Americans are now above 65, and we expect the over 65 share of the population to keep rising through 2060, to more than 23%. Apart from demographic trends, advances in healthcare are allowing patients to live longer. Glucagon-like peptide-1, GLP-1, medications should continue to play a key role in the longevity story as access ramps up through increased supply and insurance coverage. Longer term, gene editing could be a game changer within healthcare. Retiring in the age of aging has important implications. Historically, asset management focused on accumulation, but our analysts expect a shift to decumulation. A big debate for 2025 will be whether U.S. food can be made healthier at a reasonable cost under the new administration. How will lower rates impact markets? We expect lower interest rates to have a wide range of impacts. As rates decline, there is an intense debate around whether the high balances in money market funds will get reallocated to higher return assets, as well as around the sequencing of such a reallocation. We expect significant differences between institutional and retail investors in this context. We expect a material rebound in mergers and acquisitions, M&A, next year, with year-to-date announcements recently up 25% versus 2023. Cyclical and structural factors support an even larger 50% per year increase in 2025, driven by the return of sponsors and large-cap deals. Lower rates also provide support for increased M&A activity. We believe that the interest rate environment, and by extension the financing markets, will play a crucial role in enabling the transformation underway in both AI and energy markets.